Ladies and gentlemen, welcome to part B of this episode. We are still with RanksTrades, and now we want to jump into live market so that he can show us how he executes ICT concepts to make money from the charts. So, Master, show us your ways.
All right, so welcome to this episode. And as I told you, what I usually trade before is XAU USD, that is gold, and this gold 1 hour time frame. The market has been really bullish, and whenever we see the market being this bullish, then what you want to avoid is maybe trying to look for sell or short positions in times like this. These are usually difficult at times, but whenever we are in a bullish trend, we usually want to go with the trend until proven otherwise. So before that, I told you I am a top-down analysis trader. I usually start with a higher time frame, and you can see gold has been really bullish. So the least thing we want to do is we want to be selling in these heavy bullish market. So what I do from the monthly time frame is I usually zoom out and ask myself what are the things that actually drive the market. For me, what actually drives the market, we have what we call liquidities, and we have major liquidity pools, and we have session liquidity pools. About session liquidity pools, you can see Mr. Top Dollar. We have an indicator, one indicator that I use for only the 1 hour time frame, meaning I usually want to see the session liquidities, where liquidities are resting for the sessions. But from the monthly time frame, what I mark up is these major liquidity pools in form of the monthly high and also these monthly lows, because the market usually either is driven towards those highs or towards the lows from the higher time frame. A good example is this prior month. We can see the market was first attracted to this previous week month high, and then after that those liquidities were swept, the market rejecting lower, and we closed at that level. So it's a major liquidity pool because we swept, then the market retraced lower. So the same to this month, what gonna attract the market going higher? We can expect maybe this high, and later on we will identify whether indeed the market will be going for these for these other high after we have seen how price reacts to this high. So I have these levels that I've already marked up, this level 1 and also this level 2, but since now we are seeing the market is more of bullish, this low is really not of keen interest compared to this high. But if indeed we're gonna be seeing the market rally to this high, we need more confirmations, we need structure to confirm that. We also need maybe news to be in favor of us. So we have many things to combine for us to see, or for price to deliver towards that high. It's not really a guaranteed that the market will be driving to this high and then we continue higher. That's not guaranteed, but we have other confirmations that we need. So of the monthly, I can drop onto the weekly time frame, and of the weekly time frame, I want to confirm the structure. What is price presenting to me? So I can adjust my line. These of not really great importance. Have the monthly high resting there. We also have these prior high. Anything's tidy. There we go. So what are we seeing? The market has been really bullish. I told you major liquidity pools. If you can observe this candle, we swept this previous week's low as a major liquidity pool. Then we continued higher. Then we have been pushing higher. This was a consolidation week where I think I took an L. Then this week I think I'm profiting, and I want to see the market gravitate to that high. So nothing really much from the weekly time frame other than we swept a major liquidity pool, and we are bullish, and this is my first target. And then if price displaces above this level, we can expect to see price deliver to that high. So seeing that we have nothing much, I can drop onto the daily time frame to observe the structure, whether we have bullish displacements, do we have fair value gaps. And yeah, so off that weekly time frame, we have the daily time frame. What you can see also, the same major liquidity pool sweep, the market displaced higher. We had these market structure shift. So how do I predetermine, or how do I identify a market structure shift? Is when the market or candle closes above opposing candlesticks. Now you can see these consecutive 3 bullish candles, the third and the second one closed above the opening price of these 2 consecutive down close candles. So after I've seen that, so this to me is a market structure shift. The market is shifting from being bearish. Now we can anticipate bullish prices. And also the second thing I loved seeing is we had formed that fair value gap. And this is the fair value gap. I don't know whether you guys maybe are familiar about fair value gaps. So fair value gaps is when we have a gap between the first candle and the third candle. You can see the first candle's upper wick ended at that level. You can see this is the upper wick, and also the third candle lower wick. So that gap between them is what we refer to as a fair value gap. Scenarios where we don't have a fair value gap is where we have the first candle upper wick and the third candle lower wick overlapping. A good example, if I can try to find one, we have fair value gaps here because we have the gap, also have another gap, we have another gap. So trying to look for where we have no fair value gap is a scenario like this. Candle number 1, 2, 3. So we have the high of candle number 1. You can see the high, and the low of candle number 3. There is no gap in between. So in this case scenario, we have no fair value gap. But here we have a fair value gap because the high of candle number 1 and the low of candle number 3, they are not overlapping. We have this gap in between. That's what we refer to as a fair value gap. So seeing that, it shows me that the market is displacing. So fair value gaps usually tell us that indeed the market is displacing. So that was the second sign after the market structure shift to know that the market is really going higher. But it's not guaranteed that immediately the market retraces into this fair value gap, we can expect continuation going off there. That wasn't the case. We tried to push higher, the market failed, we dropped again until when the market broke through that, which at this moment in time with this candle, which was on Tuesday, to me, seeing this fair value gap being violated because this candle closed below it, wasn't really giving bullish fair value gaps. And for the market to start reversing, maybe going higher after disrespecting this fair value gap, we need to see a major liquidity pool sweep. And so that happened with this candle. We saw the prior candle low being swept, then the market started displacing again, closing above these fair value gap that we had predetermined, again forming other fair value gaps. That was also a good sign, confirming a second market structure shift because this candle had closed above that level. So you can see we have another second market structure shift, confirming with fair value gaps. The market didn't really tap into that level. We had a major liquidity sweep over here to these relative equal lows. This candle swept that, and then the market started pushing higher. I think at this point in time, I suffered 3 losses. I need to be very genuine because of these you can see it was kind of a consolidation, expecting market to reverse, going higher off this fair value gap, but the market dropped later, going lower, and got burned out at this point. Also, I think at this point, seeing that the market had around, if we can maybe zoom out, you can see this candle had already swept that prior candle high low, I was expecting to see the market continuing higher, but again, it formed kind of relative equal lows. Then we saw the market dropping, took me out at this point. Then the market continued higher. So that's how I usually try to find my structure, knowing that the market is breaking structure. We are forming fair value gaps. Now later on, after we've seen now this, we can expect sharp and rapid movement towards these high. So having identified all these liquidity pools and seeing that the market has already is forming bullish structures and also sweeping major liquidity pools, it gives me confidence or adds on to my confidence that the market is bullish. And further, I can drop onto the 4-hour time frame. I will be showing you my current trade. So if we go to the 4-hour time frame, after noticing that we had already swept the major liquidity pools, so let me take you back and maybe mark up the major liquidity pools that I'm talking about. So after noticing that these lows have been swept, going back to the 4-hour, all right, so these were that major liquidity pools that the market had already swept. The market formed fair value gaps. We were breaking through highs, so we have a confirmation of another market structure shift. So I think I had my first position around this point in time. I had my first position around that point in time with a 1 to 2 target, and later on I added on to position. Immediately we saw another breakout structure at this moment and also confirmation with fair value gaps. I added another position, also expecting the market to rally towards those highs. So if I can take you back to what I usually use and show you those positions. Here are the positions. So first, after identifying the sweep, having also observed the market structure shift, at this point I entered my position, market rallied my side, retraced to my entry, then you can see how the market is pulled higher. I also got another position at this point after, maybe if we can go to the 1 hour, we had a fair value gap that was confirmed at that point after the market had broken structure. So the first position, if you can see, I waited until the structure was formed. We had a fair value gap. So as the market was creating this fair value gap, I think I entered around there. Then we consolidated around this point, but later on the market's pulled going higher. We also confirmed another second market structure shift by the market breaking through these highs and also broke through this other high, confirming fair value gap. My entry was immediately at the fair value gap with my stop loss slightly below this low, and the market has been bullish until currently. I had this a 3 to 1, but I think I should be shading off because of what we're seeing, confirming market structure shifts. So I think I should be managing my positions currently, but even though my stop loss currently is at this low, so that even if the market was to be against me, I wouldn't really go at a loss, trying to manage my risk accurately. So that's how I usually go about the market. Firstly, identify, I want to see the market rally to this previous month's high. That's where I want to see the market. Also trying to observe the structure and also the liquidity. So those are my three main concepts that I use. Having a direction, I drop onto the lower time frame to observe the structures and also look for fair value gaps and also market structure shifts, and then whatever is remaining is only the execution. Then yeah, if whatever happens, because our prior suffered losses, and that's part of the game. But that's how I usually approach the markets top dollar.
Yeah. So that is very clean, and I'm very sure people will find value in that. And it is very simple that people can be able to, even copy that. So I'm curious to know, like now you have done this intensive analysis. You put on a trade, then it becomes a loss. How do you respond to that now? How do you behave to a loss when you have done all the analysis? It checks all the boxes. It seems like an A plus setup, but still it goes to a loss.
To me, I have that mindset whereby I briefly just say it's a good loss, because unless I didn't follow my plan, I have losses. I don't know whether I deleted them. They were good losses whereby the mark I could have maybe analyzed nicely, but where my stop losses were, they were too tight. You find a good example if as in this, you can see where the stop loss is slightly
Yeah.
below the low. It's not really at the low, right? So if I put it at the low, you find that the market usually nears at that point, or we sweep that low, then the market rallies higher. So with that, I think with journaling, I learned that I shouldn't really be having my stop loss on tick at the low, but give it a buffer. If the market maybe rallies, sweeps the low, and then we continue higher, I am very safe. And how I usually manage my losses or my emotions is, as long as I did follow my plan and also my risk management was on tick, whereby the amount I've lost wouldn't really make my account really suffer, then I'm good. I just do my thing, maybe show up again tomorrow, repeat the process. So the first thing I
You
usually consider is my risk management.
you have talked about journaling.
Yeah.
How often do you journal, and how do you think journaling has been beneficial in your trading?
I think journaling is very important as a trader, and also as a person, because you'll get to, maybe that's where growth happens, right? For you to grow, you need to identify where you went wrong. You need also to learn from whatever you made, the mistakes that you made, and you cannot learn, therefore you cannot grow if you actually don't reflect on the mistakes that you did. And how can you actually reflect on them? Through journaling. Identify the mistakes that you did, review them, and maybe try hard not to repeat them. And through that, I think that's where growth happens.
Yeah. I think that is that's good there. So in a good day, how many trades are you looking to take?
Um, I'm not looking to take positions. I just want to see the market give me what I want to have. So I can go, let's say, a week, 3 trades per week. I think I'm satisfied. And yeah, let's say 3 to 4 trades a week. I'm very satisfied, because told you I'm more of, I enter from the 1 hour time frame. A good example is this position that is currently running. This position was from Monday. This was a Friday last week, was held during the weekend. So this position was from Monday, and I've not added on to another position, and today is on Wednesday. So averagely, let's say if I get 3 trades, if one is a loser, two are positives, risking 1%, then yeah, 4% for me is very fine for the week.
Yeah. I think it is more of taking a
Ah,
few, but quality few.
yeah.
Instead
It's
of
not about the frequency.
yeah,
Yeah,
instead
it's
of
not about the frequency. The fewer
taking
is
40
more.
trades in, yeah. Instead of taking 40 trades in a day, you can have two, but which are clean trades. So,
Exactly.
Ranks, I really want to appreciate. Thank you for sharing this. I'm sure people at home will be able to look at this and find a takeaway from this. So, ladies and gentlemen, I will ask again that you subscribe to my channel, and until next time. God bless.
Till next time, be safe.